Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com.
Welcome to the second week of the Trading New Year 2012, and this is our first roundtable. Well, the first trading day of 2012 was explosive, higher, right? And then we just kind of drifted around and went nowhere. What's that all about? Well, we're approaching earnings season, and obviously Europe still has some fires burning. One thing I'm concerned about is European banks taking all that liquidity from the ECB and just depositing it back, something that happened here in 2008. We got through that, but it is a concern. Shiraz, how worrisome is that?
It is. It's quite worrisome because we have these economic fundamentals in the broader Eurozone looking down, and one of the ways in which you kind of offset that by more liquidity through the banking system, and now the banks are scared as to who and the level of counterparty risk that is in the other banking system. So it just adds to that negative momentum for the broader Eurozone economy. So if this thing sustains, we may have a much worse recession in Eurozone than what the market is looking at. We got out of that, as you mentioned, through the Fed. The ECB appears to be very hesitant in doing the same. If it sustains, the banks are not able to raise the capital that their national governments are asking them to. It could spiral out of
And maybe
control.
some of that fear is justified because we saw that hedge fund attack on the Unicredit Italian bank.
That's right.
Yeah, I was going to say that I wouldn't be too worried about the parking the money at the ECB quite yet because they just got the money, okay? And so they're going to take their time and figure out where that money goes. Our banks did the same thing 2+ years ago when they got the money originally.
That's right.
They're not just just going to start throwing it around right away. So they're going to play it safe. They got out money for virtually nothing. Now they're going to pick their places. So I wouldn't be worried about that yet. A little more worrisome was seeing that German bond yields were negative. Okay, and so that is...
Which happened here too.
Which is a sign that people are very afraid. I just want my money back or even a little less than what I gave you as a place to park it.
Right. It's the return off capital, not the return
it's
on capital.
And it's a confidence game. So here, when our banks, piled money with the Fed, it took the Fed to restore confidence and say, hey, listen, this is going to be okay. This is all going to work out. It looks like still a lot of fear over there.
Yeah, the worrisome component is that the recession that everybody thinks is going to be a small one could become worse in Europe.
That's what I said.
That's the downside risk.
That's what I said at the end of the year last year. I said that's my biggest fear is that Europe gets a lot worse before it gets any better.
That's right.
Steve, I want to talk about our earnings season coming up. Yeah. We've had a few warnings. Yes. We had Alcoa fire a shot across the bow last week, closing some plants. Will most of the surprises be big surprises to the downside here?
I don't think so. I think there will be enough people who miss and talk about problems in Europe or problems in China, enough to get some people worried. But I think that in general, when all the reports come out, I think it will be generally positive. It will support current earnings expectations levels, hopefully a notch above, and a reason to own U.S. stocks versus others. So I would call it a mixed to slightly good earnings season. But yeah, if you're looking for trouble, you'll be able to find that in this earnings season. But if you look at the broader picture, I think you'll see enough good news.
All right, Kev, you agree there. Give me your best outlook for earnings season and a possible shocker here.
Well, let me just say that the one thing that's interesting is that I think this quarter is going to be the first quarter in 8 quarters that the earnings growth rate is going to be less than double digits. So that is interesting to look at. But when you look at all of the earnings estimates that are ultimately going to be ratcheted down over the course of the coming quarters, you could create a situation where it becomes easier for these companies to be able to meet or exceed expectations. As far as outlook, I am starting to look more at companies that have less European exposure because I think the biggest fear that Steve had said is that the slowdown in Europe is worse than what had been forecasted. So if you're focusing on companies that do a lot of business in the U.S., you have at least a degree of insulation.
Okay. All right, we'll be back with stock picks in segment 2.